The RBI has asked Paytm Payments Bank to stop accepting deposits and stop processing any credit transactions for all of its accounts. That includes customer accounts, wallets, fast tags, and more. And this is all happening from February 29th. That is the deadline. In other words, Paytm Payments Bank can't really perform any of the banking services that a payments bank is supposed to perform. However, customers can still use the money in their respective accounts to process transactions until their money is exhausted. So, how big of a deal is this for Paytm? Well, according to the company, this could impact anywhere between 300 and 500 crore rupees of their annual EBITDA. And according to one user on X, Paytm Payments Bank's business contributes almost 60% of Paytm's EBITDA, which is huge. The impact here is massive. This is going to affect 300 million wallets, 30 million bank accounts, 1.6 billion monthly UPI transactions, and 8 million fast tags. So why is this happening? Why is the RBI doing this to Paytm Payments Bank? Well, the story goes pretty far back to the 11th of March 2022 when the RBI stopped Paytm Payments Bank from onboarding any new customers, and they took this decision because of regulatory concerns that had surfaced, and so Paytm Payments Bank was asked to conduct a comprehensive audit of their IT systems. Since then, the RBI has rejected Paytm's payment aggregator license request and fined them 5.4 crore rupees for non-compliance of KYC, and these are just a couple of the issues. According to a recent RBI notification, there's been persistent non-compliance issues at Paytm Payments Bank, which has led them to take this decision. And according to TechCrunch's sources, the RBI is even considering revoking their license. Since the RBI's public decision here, Paytm's share price has fallen 20% in a single day, and so Paytm really has no option but to remove Paytm Payments Bank as their partner and is only focused on working with other third-party banks. And I think the impact here on the ground, the thing that people are going to notice most on a day-to-day basis, is the fact that Paytm's merchant partners who use Paytm Payments Bank for processing their payments, they're not going to be able to accept any more payments unless Paytm figures out a way to move them to other bank accounts. And remember, Paytm has more than 30 million merchants onboarded onto their platform, and so this could be a lot of work for Paytm to figure out a way for these transactions to not be affected, and they have basically just 1 month to figure everything out. All right, next up in the news, if you guys have been watching this channel for a while, then you know that I love to promote and encourage small Indian hardware startups that are making in India. And so today I wanted to highlight Trigo because they've teased their Gen 2 monster cruiser. And again, this is just sort of a teaser unveil. It's not really something that you can buy at the moment. They're still working on it. But again, they're designing this and manufacturing it in India, which I think is very cool. It kind of looks like a three-wheeler scooter, but it's actually Trigo's electric touring cruiser bike. And they're planning for it to have a range of 250 kilometers and a top speed of 120 kilometers per hour. But we're probably going to have to wait and see what happens with these guys. They're not planning to launch it until 2025. So we'll keep you posted. All right, next up in the news, I know you guys are probably sick of hearing the name Byju by now. It's just been this progressively worsening situation, but it looks like they might be raising money at a valuation of just $25 million. And I'm sure you guys don't need a reminder, but again, this was India's most valuable startup at a valuation of $22 billion. And this really shows how desperate Byju is to raise funds at this point. They're in desperate need of cash. It's been almost a year since Byju last raised any funding, and they've been continuously losing money ever since. In fact, according to one money control report, Byju Ravindran has even mortgaged his house to pay salaries of employees and pay lenders and vendors as well. But moving on to some more positive news here, PB Fintech has reported their first maiden profit. So PB Fintech is the company that owns insurance marketplace Policy Bazaar and also credit marketplace Byju Bazaar, and they joined the list of Indian startups that become profitable after posting their first ever net profit in Q3 of FY24, making 37 crore rupees as profit after tax. This is on revenue of 871 crore rupees, and Policy Bazaar has sold 39.8 million policies to 15.7 million customers so far, making it India's leading insurance aggregator with a 93% market share. That's massive. And one of the things that they're claiming has helped them to achieve this profitability is their high customer satisfaction rate of 88%. All right, next up in the news, it feels like every week now we're hearing about another Indian company that was based outside of India deciding to return to India, and the latest company in that category is Zepto. Now, according to an INC42 report, this reverse flipping isn't yet finalized, but they are reportedly looking to register in India by the end of 2024. And what's interesting about this move is that investors could actually be taxed as much as 42% for this move. And if they're planning on making Zepto an Indian company, it might actually cost them as much as $600 million. And yet, it seems like they're still willing to move Zepto's headquarters back to India, and one big reason for this is Zepto's plans to go public in 2026. Now, speaking of investors doing whatever's best for the startups in their portfolio, I want to take this opportunity to talk about this video's sponsor, Jungle Ventures. They've been supporting the Indian startup ecosystem for a while now, and they've been a key investor in companies like BookMyShow, LiveSpace, and Adamberg. And now, to take their support a step further, Jungle Ventures has come up with a program called First Check, where they partner up with founders at the early stages of their startup, whether it's idea, pre-seed, or seed stage. And as the name First Check suggests, they come in as the first investor, sort of like a founding investor. And the way that they differentiate themselves from programs like, for example, Axel Adams or Surge is that there isn't really a cohort here. Their focus is on deep one-on-one partnerships tailored to each founder or idea that they're investing in. And so if this seems interesting to you, if you're an early stage founder or you're just in the idea stage of your startup, then you should definitely check this program out. You can learn more about Jungle Ventures First Check by clicking on the link in the description down below or in the top comment. And big thanks to Jungle Ventures for sponsoring this video. All right, next up in the news, I'm not happy about this one. Zomato is removing their on-time guarantee. So specifically during an earnings call for Q2 of FY24, Zomato's CFO said that Zomato Gold members are actually less profitable for the company than non-Gold members. And so he said going forward, they're planning on reducing the negative impact Gold member orders are having on their business. But now that this has been revealed, things have become much clearer. Zomato is deciding to remove the on-time guarantee benefit that was provided to Gold members. And basically, for those of you guys who are out of the loop, this meant that customers would get a cashback of the order amount. So basically a full refund for the order if it was late. And there are a lot of companies that have been offering this as a normal part of their service for years now. For example, pizza companies like Domino's usually offer 30-minute or free delivery. However, since Zomato has decided to remove this benefit for any new or renewed Gold memberships, it seems like it was causing a huge strain on their finances and profitability. And so they just decided to cut it. All right, next up in the news, ONDC is piloting financial services. According to Money Control's latest report, this is being done in partnership with EasyPay and DMI Finance. And basically, ONDC is looking to build an entire infrastructure for 3 financial product segments: credit, insurance, and wealth management. According to this report, for the credit segment, ONDC has received interest from 85 firms. And for the insurance segment, ONDC is expected to launch motor, health, and marine insurance products over the next 6 to 8 weeks. And then for the wealth management segment, it's expected to start with smaller size mutual fund investments. With 1 lakh daily transactions, ONDC is kind of becoming one of the dominant platforms when it comes to gaining credibility in the e-commerce and ride-hailing spaces, and so it makes sense that they would move into financial services. All right, now let's move into the funding news segment of today's video. So the first month of 2024 is officially over, and Indian startups have raised $558.27 million throughout the entire month of January. So I thought it would be nice to go through some of the key funding highlights throughout the month. So just last week, as you guys probably know, Bhavesh Agrawal's Krutram AI raised $50 million to become the first unicorn of 2024 and the first in the month of January as well. Also, for those of you guys who are keeping score, this is Bhavesh's 3rd unicorn after Ola Cabs and Ola Electric, and it's also the 2nd biggest funding round for the month of January. Now, we didn't get a chance to cover this last week because the news did come out after we had already recorded the video, but then coming in at the biggest funding round of the month, and this also happened last week, we have Vivify India Finance, which raised $75 million. And then the 3rd highest funding of the month went to Kolkata-based QSR brand Wow Momo. They raised $42 million. And if we look at sector-wise funding here for a second, the fintech industry raised the most amount of funding at $158.49 million, followed by the e-commerce industry, which raised $77.46 million, and then AI with Krutram alone raising $50 million. Now, looking at this week in particular, Indian startups raised a total of $74 million, which is significantly less than last week's $175.67 million. But looking at some of the companies that have raised funds this week, first of all, we have Gurugram-based EV ride-hailing startup BlueSmart. They raised $25 million in a mix of equity and debt. After that, we have Bengaluru-based Move in Sync, which offers SaaS-based solutions to manage fleet operations. They raised $15 million in their Series C round. Then we have Chennai-based logistics startup WizFreight, and they raised $15 million in their Series B round. After that, we have Bengaluru-based AI security startup P0, and they use LLMs to detect security issues in code before it gets shipped, and they raised $6.5 million in their seed round. Then after that, we have another Chennai-based startup, this one in the aquaculture space. Aqua Connect is a startup that offers a one-stop full-stack solution for aquaculture farmers. This includes everything from offering a marketplace to buy farm inputs, to selling farm produce, to accessing credit, and they've raised $4 million in their pre-series B round. And then finally, we have Gurugram-based Electrify Mobility, which has a very straightforward name. They help companies to transition their fleets into electric fleets by offering EV infrastructure. These guys have raised $3 million in their seed round. All right, that is all the startup news that I have for you guys this week. I really hope that you enjoyed the video, and I will catch you in the next one.